Google stock has been getting absolutely decimated here recently. The stock is down almost 12% just in the past couple trading days. It is absolutely collapsing right in front of our eyes. And everybody's kind of looking at Google stock and is trying to figure out, is this a great buying opportunity or not really in this market, right? And so we got two videos to react to in this one here today. First one up here is Gene Munster, who used to be known as an Apple analyst mostly, but over the years I think he's become more known for actually not just Apple, but Tesla. He's going to give his opinion on Google stock and his perspective, and I want to react to that and kind of give my perspective as far as Google stock goes as well, right? Then we're going to watch this video and react to this one, which I think is quite an interesting take here. This gentleman says, betting against Elon Musk is like betting against Steve Jobs at the peak of Apple. That's a take that you haven't heard from many folks out there, so I thought that would be a good one to react to in this video here today. And I'd love to hear your guys' opinion in the comment section on if you think Tesla, Google, or any other stocks we talk about in today's video are buys in your opinion. And just so you know, we are less than 24 hours away from the big day. The next time I buy stocks, less than 24 hours now at this point in time. Tomorrow is the big day. I buy stocks in the Patreon portfolio, so that's a must join in there. That will be linked in the description. It might also be pinned comment down there. And we'll see what I buy. What do I buy? Google, Amazon, there's a lot of deals all of a sudden. I just saw Lyft's down over 30%. It might not be Lyft, okay? Uber stock, we'll see. We'll see. But yeah, tomorrow I will post the moves I'm making in there, so make sure you join us in the Patreon. And also, we are 4 days away from the once-a-year Valentine's sale we do for Becoming Master Stock Market and Dividend Investing Mastery, my two best courses ever. So if you're interested in that, check out the description area as well, and let's jump into this.
Sir, he's managing partner of Deepwater Asset Management. How much of a gaffe was that? The stock did move lower. Should it have?
Probably not as much. I mean, when I think of those kind of gaffes, I think of Tesla, Cybertruck, Elon Musk throwing that rock through it. It kind of had that kind of screeching effect, but ultimately he was able to vector that into a positive direction. It's more difficult for Google to do that here. There was another layer to the sell-off in shares yesterday, which was Microsoft's comments that they're going to go after search, and that was a nicely profitable business. And I think the combination of the first negative read on how Google is doing with Bard, along with that comment about the excitement that Microsoft has around Bing, I think pushed shares down. I think it was an overreaction. I think it was an overreaction because when we think about AI, this is a multi-decade endeavor. And we're talking about something that has really been forefront.
First off, before he goes any further here, I just want to push back on something this gentleman just said that I think is very, very important, Gene Munster, okay? What he just said, he basically said about how, you know, Elon Musk and Tesla, they had I don't know if you guys remember when they launched the Cybertruck or they showed it off, right? They threw this big rock, and it was supposed to, the windshield was supposed to be super strong, and they threw this big rock, and it busted the windshield, right? Or the side window of the truck. And he's basically trying to say, like you know, it didn't really damage Tesla or Elon Musk or Cybertruck and those sorts of things, right? It made it, you know, everybody didn't really view it as that bad in the end. But here's the important thing I got to tell you folks, okay? Here's the important thing. Tesla, super cool, okay? Super cool brand. Elon Musk, super cool, right? And so when you're super cool, you can get away with, let's just call it screwing up, doing something like that, and everybody kind of like, oh, whatever. It becomes like a funny thing. It's like a funny meme, like, ha, that was funny, but it's cool. But Google's not really cool. Google's super useful, right? I use Google every day, but it's not really cool. And so, you know, that's not really the type of thing you want to have happen. It's just a bad look. It makes you look a little unprofessional. It makes you look like as a service you maybe don't really have it together, right? Versus other services. So in my opinion, you can't really say this is like Tesla and like Cybertruck because this is not Tesla. Tesla's way too cool and just it doesn't matter what they do or Elon Musk does. I mean, people would just be like, oh, that's funny, that's cool, or whatever, right?
To investors and consumers since last November. And so to make a decision that Google is been negatively or is behind the curve based on a demo, I think is a little bit premature. I would add one vector or one piece that's just really surprising about the whole conversation around Microsoft and AI and Google is that Google has invested far more into AI than Microsoft. In 2017, Google changed their mantra from organizing the world's information to being an AI-first company. They talked so much about AI and machine learning. We used to do a buzz game bingo on their earnings calls and count the number of times that they would reference it, 17, 25 times in that range. But my point in saying that is Google is not to be counted out when it comes to this AI race.
Well, what do you think this ultimately
I agree with that. Don't count Google out in regards to this whole situation. I do agree with that.
looks like? And the reason I ask is Google's success thus far and the way search that as we've known it.
It's a horrible situation for Google because they were viewed as there's a view and a thought process that they're already behind, right? In regards to this. That's what people are thinking. Like, Google's behind. And then they do a demo and it gives a wrong answer. And it just kind of like, see, they were behind. They don't know what they're doing. They're way behind in this stuff. It was one of the worst things that could have happened to them.
So far has been to link out, right? To link to other places. And that created an ecosystem for the entire internet. And ChatGPT, at least as we've seen it today, is effectively a one-way closed system. You ask a question, it actually gives you an answer. Don't know if you think it's the answer, but it's an answer. But it's not an answer that then has a sort of choose your own adventure or options or other ways to get to places to go see whether that answer is right or wrong or what other things you might want to know. And how you think that changes the broader dynamic around the internet if that becomes the norm, or does it?
Well, what probably is going to become the norm is you're going to have an option, and Bing has experimented this, and Google has talked a little bit about this too, but to have kind of the quick answer, the GTP chat type of an answer, something that is very clear, but not necessarily backed up with citations. And then separately, they will have kind of further questions to further drill down so you can make sure that you find what you want. I don't think we're going to get to a place where that search is going to be you enter a query and there is this omnipresent answer that you can lean on.
But,
I think that there will.
Yeah, man, I wish they would have played that out more, right? But I think about it like this, right? Like, think about what you Google, right? I don't know, pasta recipe. Like, I don't want to have just one pasta recipe given to me. Like, let's say, for instance, a fettuccine Alfredo recipe. I don't want just one fettuccine Alfredo recipe, and it's like, here it is. It's like, I want to see other options and kind of pick my own and choose my own that I see fit, right? Let's say I want to know sushi restaurants, that are close by or something like that. It might be something that's popular that you would Google, right? Like, I don't want it to give me a paragraph on, why this is a sushi restaurant I should go to. Like, that it's not an experience, right? So the reasons you would use GPT, okay? Sometimes it's hard to. Is it a B or a P? Okay, ChatGPT. The reasons you would use that is many times very different use case than you would use Google. And Google can maybe give you that experience as well right inside the search engine. Maybe there's just a different button you hit. Imagine when you go to the Google search, there's just a different button there. So I think that definitely has potential. But in terms of Google, if you really want to know why they're selling off this stock right now, if you really want to know, it has nothing to do with artificial intelligence or any of this. The real reason is they're looking for a reason to sell a stock because the government's doing a big look into Google, if they're a real monopoly. And the U.S. government really, I don't want to say cracking down on them, but they're going to do a deep dive. It's going to cost Google a fortune. It's going to cost them a ton of money. They're going to have to fight the government in this situation. And it's probably the most serious look into Google that they've ever had to deal with, right? And they do dominate the search market. And so it's going to be I think it's a similar situation to two companies that have gone through this in the past. One is Microsoft went through a situation in the 90s that was pretty significant. And a lot of people were talking about Microsoft was a monopoly in the 90s. And the other company is Meta. Meta had to go through a ton of government stuff like 2017, 18, 19. They're finally getting out of some of that government stuff that they had to go through. It was a lot, right? So I think that's the real reason people are selling off Google stock and Wall Street's dumping their shares. The company just lost, what was it, $200 billion of market cap in 2 days? Come on, man. Like $200 billion of market cap in like 2 trading days? That's Wall Street's looking for a reason to dump their shares right now, and I think they found their reason. They can blame it on this AI. They would never come out and tell you it's this or that, but at the end of the day, that's what's really going on in my opinion, okay? Next up here, betting against Elon Musk is like betting against Steve Jobs at the peak of Apple. Let's get into this.
So go by hey you or oh no it's him again, so that was close enough.
Well, we're thrilled you're here to weigh in on this big debate everyone's having over the data. And listen, from my point of view, it seems like the bond market's always leading, the job market's always lagging, and that's a worrisome sign. But you've had much more experience. What do you think is going on here?
Well, I tell you, I would increasingly go with the jobs markets, and here's why.
I wasn't expecting this, man. I was expecting straight into Tesla. We're talking about jobs, market, and the economy. All right, I'm game for it. Let's go.
Bonds are a hypothetical construct based on fear of interest rates or changes. Jobs are very real. What that tells you when you get to the real part is that companies still need more workers to keep up with demand. Now, granted, the composition is that is shifting from tech to hospitality, but it's a real number nonetheless. So I'm going to go with jobs every single day of the week. I don't care about the academic argument, recession or not. I think the Fed's got it wrong. Those models are busted. CEOs, on the other hand, particularly like Pepsi, they're getting it right.
So we'll get into definitely some of the...
Yeah, Pepsi had shocking earnings. Did you guys see the Pepsi numbers? Okay, let me tell you one shocking number about those Pepsi earnings. First off, they beat on EPS as well. Revenue. Pepsi beat by $1.2 billion revenue. $1.2 billion. That was kind of shockingly surprising, to say the least. In a 3-month span, $1.2 billion beat for Pepsi. I don't know where they pulled that rabbit out of the hat, but I was like, wow.
You like here, because actually Tesla is one of them, which a lot of people will find interesting. But one more question about the labor market. I also...
Hold on. Let's go back here.
Because actually Tesla...
So this gentleman, recession risk. He says, we're not out of the woods yet. Fair. The world's best companies continue to put up numbers, and that's what investors focus on. Yes, absolutely. And a lot of these big, huge companies are going to see their margins and profitability improve.
Which a lot of people will find
improve in 2023. When in doubt, zoom out. I love that. Preach.
But one more question about the labor market. I also, in a way, wonder how much better can it get from here, right? Are we just going to stay at these historic levels of jobless claims? Are we going to stay at record low unemployment? It seems like the only way to go from here is worse. And then wouldn't you want to be fading that, from the market's point of view? Inevitably, I don't think it can get any better.
Well, instinctively, of course, you're going to want to fade it because that's what your guts are telling you. But what we also know from research and a huge body of history is that the markets have an upside bias. You find treasure at the bottom of the ocean, and typically that's what happens when the markets drop. So if you're sticking with the right companies, the brand names, the CEOs who are moving forward, I would submit over time that's the better and arguably the more profitable play.
Well, as we often know, you can kind of get the macro right or wrong, but still make plenty of money if you're in the right trades. For instance, Tesla, you stuck your neck out on this just at the right time. You still a fan of the stock?
Oh, absolutely. I think this thing is just getting started. Anybody betting against Elon Musk, whether they like him or not, that's moot. But anybody betting against Elon Musk today might as well have been betting against Steve Jobs.
Is he calling him Elon Musk instead of Elon Musk? That's interesting. Elon Musk. He's a long Musk. A long Musk.
In a day. We know how this is going to play out. He unleashes just incredible transformation in every industry he touches. He's not getting stopped anytime soon. He's got enough money to do what he wants. He's got a clear vision. I'm very excited. I think it goes back to 300 a lot quicker than people think.
Let's talk about that for a moment, because a lot of investors the last couple of years have learned that it doesn't just matter if you like or don't like a stock. It matters where you enter and where you exit. Why not take the profits now? Why say I'm staying in this till 300? And would you really not get out at 250 or 270 or 280 if we get up there?
First off, why would I get out at 300? Like, what? What are we talking about here? Why would I get out at 300? Like, what? No.
Well, every investor is different, of course, and that depends on what your unique risk tolerances are, your profit objectives, et cetera. I'm a big fan of when you have a double, you take half off and you let the remaining shares run for free, because now you've paid for your initial investment, you're still in the game, and you can continue to add more later if you want. So it's not a bad strategy. Not a bad strategy, because you're essentially, your stock doubles, right? You sell half your shares, right? And you let the rest ride. Now you're playing with house money. So wherever the other half of the shares go, complete house money. So I wouldn't necessarily call it a bad strategy, nice shot. But what I would say, folks, is it's not the best strategy in terms of game-changing companies. A good example is Elf stock for me. Elf stock, since I started buying that stock, 900% gain, 900%. And I started buying that, I think it was either end of 2018, beginning of 2019, 900%. Now, the truth is I sold most of my Elf shares way too soon. What I should have done is let that baby run. And maybe cash out a small amount, but not a huge amount, right? And, when you're in these sorts of companies that are executing far better than you ever anticipated, which Tesla would be in that category, you got to let those babies run. Cash out some shares here and there, but at the end of the day,
Let them run. That's the biggest thing I've learned over time. Like, there's a lot of lessons I've learned over the past 15 years in the market, but that's one of them. When you're in game-changing companies that things are just going much better for the company and they got the top-tier management teams, you got to let them do their thing, because those stocks will go on runs of several 100%, and some, the game-changing ones, go on thousands of percent moves, okay? And so, pull some shares here and there, but, don't be such in a rush to cash out profits when you got great companies. If it's some crap company and it was just a valuation play and it's an okay company and you double up your money, okay, I understand it. But Tesla's not one of those companies, nor are some of these companies that just have those management teams where the margins keep increasing, their net income, their brand, their marketing's phenomenal. Like, let those babies run.
Of all or nothing, Kelly. Take some money off the table if that makes you feel good, let you sleep better at night. Nothing wrong with that strategy whatsoever.
How does that get you to a Pepsi, to a Lockheed Martin, which seem like the more traditional names we might hear from? Again, that's why I highlight Tesla, because I think it's...
In those sorts of companies, a Pepsi, a Lockheed Martin, you make 50%, you double up your money in those stocks, you cash. Those aren't going up 500%. Those aren't going up 1,000% over the next 5 years, okay? So if you make a 50% gain or 100% gain in those sorts of companies, you take your profits and you run, unless you're using them as a dividend cash flow. And then that's a whole different situation, because then it's just about making that dividend cash flow and reinvesting that money, okay?
Much more provocative one. Pepsi had earnings this morning, stocks up 1%. Lockheed, obviously, defense has been doing pretty well lately. Why those two?
There's a different scheme in every stock. They've got different signatures, if you will. Pepsi and Lockheed, to me, are all about stability and ongoing demand. People like their soft drinks. They like their snacks. Pepsi is a solid company with great management, solid consumer demand, capable of handling inflation. So that's why I like that particular name. Lockheed Martin is a similar vein of thought, but slightly different. The world is a very complicated place right now. U.S. defense stores, munitions are down considerably. And, you can argue about the politics of that. But again, I like to stick with the real numbers. And what I know is that we're going to have to replenish all of that. And that's great.
So, in terms, and by the way, I appreciate his points there. Some of them I definitely agree with. Some of them I'm, a little shaky on. But in terms of Pepsi, you might look at that stock, you say a double beat. Beat revenues by $1.2 billion versus expectations. Incredible number. Stock's up 1% today? Like, why is that stock up 1% and not up 10% or something like that? Pepsi valuation's rich, just on historical averages for Pepsi overall. So that creates a kind of a dilemma, a problem for Pepsi overall. But obviously an extraordinary company that's executing very, very well. So in terms of betting against Steve Jobs, 100%, man. You don't get in them. In all these short sellers, they keep trying to bet against Tesla again and again and again. They keep trying it. It's not about money with these people. It's about ego. They're trying to feed their egos of being the one that bet against Elon Musk and got it right. And you can do that. It just doesn't make any sense, man. The stock market should be about making money. What are we doing this for? We're doing this to make money, right? So we, in 5 years from now, our net worths are considerably more than they are right now, right? Or than they were 5 years ago. That's why we do this. And so these people that want to play this ego thing, I'm just like, what are you doing? What are you doing? I don't understand. It reminds me of this old Floyd Mayweather clip I saw years ago. I think it was Shane Mosley or somebody was talking about, Floyd Mayweather, he only fights for money. And he said, you effing dummy? What do you think I'm out here doing? You think I'm just fighting for ego and for pride? You got to be kidding me, right? And same thing in the stock market. I'm in this for the money, man. It's not just for the ego or anything like that. But some of these short sellers, I guess they just got enough money to lose. They'd rather bet against Elon Musk just to boost their ego. What are we doing here, man? What are we doing? But that's what they like to do. It is what it is. And these folks lose time and time again. I appreciate y'all joining me. Thanks for being subscribed. 23,200 or maybe even 23,300 subscribers now. Something like that. I appreciate every single person that subscribed to the channel. Thanks for being here. And also make sure you join us in the Patreon. Less than 24 hours from me making my next moves in there. And you'll get to see what I own and the moves I'm making in there. Appreciate y'all and have a great day.